again soon.
Yeah.
All right. Well, the market's not doing anything, just about 19 points up on the Nifty. Let's go across to our next guest on the show then. Gautam Sinha Roy, Executive Vice President and Fund Manager at ICICI Prudential Life Insurance. Gautam, thanks for joining in. We'll definitely talk about your portfolio and how you're looking at this market. But before that, a more general question. There's this big event that everyone's waiting for. This 25 basis points seems to be a given across markets. But what after? What happens tomorrow onwards? Right now, are you pricing in, maybe a sideways market, time correction at best, or do you think that we can probably get a bottom and start moving higher pretty soon?
No, thanks, Urvi. Thanks for having me. I think the answer to that right now looks like we are in a sideways market with some upside in the near term because of the event in the evening today. And there are hopes of some talks about repivoting by the Fed sooner or later. So that's something that we are anticipating and looking forward to. Valuations are also reasonable at 17,000, no doubt about that. Plus the amount of FI selling that our market has absorbed over the last few months, if that were to reduce or that were to change, that itself creates a trigger in the near term.
All right. Hi, Gautam. Good afternoon. Nigel on this side. Gautam, how do you approach the markets, though? The headline index is down roughly around 10%, but stocks in the broader markets have got pummeled. Some of them are down 30%, 40%, 45% as well. You'll say we're at 17,000 odd. Some portfolios are feeling like 15,000. How would you allocate money from here on? Do you think that the broader markets now could, see a relative outperformance from these levels post the recent correction? Or given the kind of global setup, you still would allocate money to the large caps?
True, Nigel. So it's a bit of a quandary because, as you rightly pointed out, the upsetting factor here is the global situation where we do not know how that will swing. But having said that, as a deployer of long-term capital, do I like these markets? Probably yes, because I'm getting good stocks at reasonable valuations where growth outlook for the next 5 years is good. So from that perspective, I do like the market and the ability to deploy money at the current juncture.
So where, Gautam, are you deploying? Which sectors?
I think the standout sector where valuations are in your favor today is BFSI with, since before COVID, only 10% compounding in the banking index means that there has been no re-rating of the sector. Rather, some de-rating in select stocks have happened. Earnings are very strong. NIM is at a very high level. So we find great opportunity in the overall BFSI sector, particularly in the large banks. I would say the opportunities are very good today.
Gautam, in the large banks, one of your top holdings is HDFC Bank, which has been a relative underperformer versus its peers. Is there a reason for you to churn your holding in banking? Which ones, are likely to perform best from here on?
Yeah, unfortunately, Rima, can't get into very stock specific, but what has happened in banking is the dispersion in valuations, which was there 4 years back, that has narrowed. And now we see large banks to be more or less similarly valued, the private sector ones. And we see the growth opportunity to be equally good for many of them. So I would say that a basket of large banks and probably a select mid-cap banks to even some NBFCs would be a great construct to play this banking story. And this construct remains valid, especially given the fact that the overall credit growth environment is healthy. The Indian macro, as we say, is healthy. Even the micro is healthy. We are not seeing any troubles on the NPA side or anything like that happening. There's a infrastructure buildup which is happening. Capex is happening. Consumer loan demand is good. So from a 3-year perspective, is there an opportunity in banks and NBFCs, especially given the valuations? The answer is yes. And I think today, there is an opportunity which is quite diversified. So you have multiple banks which are looking quite attractive and even NBFCs which are looking attractive from a 3-year perspective.
Okay, so banks and NBFCs definitely get your thumbs up. Gautam, specifically, IT presents a pretty interesting dilemma, right? A lot of the large cap blue chip IT stocks are in a bear market. Infosys is down 25% from the peak. Wipro is down 40% from the peak. But the near term obviously is very muddled. So what is the approach you're taking? Is this the time to start accumulating IT for a medium term investor, or do you think it's too uncertain right now, so best to stay away?
Yeah, absolutely correct, Surbi. So the entire brunt of the global uncertainty is being borne by this sector, unfortunately. So we have a more neutralist stance in the sector, particularly given that valuations have corrected. And per se, many of these companies have done a fantastic job over the last 3-4 years. So two things. Overall, this is a very large sector, almost 13-14% in indices. So from an overall allocation perspective, we believe that even now we will remain neutralish till we get the clearer picture on the global side. And we are more focused on selection here, which stocks to play, because especially in IT, we have noticed that if you compare from pre-COVID to now, which is a very judicious comparison to do, we see that there is quite a bit of divergence in performance, be it in revenue growth, be in margin expansion, and hence in PAT growth for these companies. Capital allocation for all the large companies have been fantastic. There have been select mid-caps which have done remarkably well in terms of turning their business around and capturing the opportunity, the digital/cloud migration opportunity, which has presented itself over the last 3 years. So I think we have a decent set of companies identified there. And of course, as the global uncertainties recede and the picture becomes clearer, that will present an opportunity to add on to the holdings that we have in the sector.
All right, Gautam, how do you play the consumption story here in India? Would you look at staples, discretionary spends? That seems to be split down the middle. Rural India has been struggling, but now getting into an election year, the hope is that things improve from here on. However, you have suddenly this unseasonal rains that's probably come out of syllabus. What's your approach to the consumption space?
Yeah. So from a staples perspective, the margin benefits is definitely there. We have been hearing of early signs of pickup in even the rural or semi-urban demand, but the jury is still out in that. In the meanwhile, the urban part of the consumption universe, the discretionary part, is seeing some slowdown over the last few months. We have seen Q3 results. So it's a bit of a dilemma, and many of the stocks there are still quite expensive. So again, I think the approach here is similar. See, we do not want to forego of winning companies, great companies which have potential to create alpha over the long term. So we are lying low in terms of our allocation in some of these stocks. And as and when the macro environment turns more favorable, we'll probably go deeper into these companies and build larger positions. So that's the approach we are using, again, being stock selective and stock specific. So, but we believe obviously the opportunity over the next 5-10 years, the decadal opportunity in consumption doesn't even need to be discussed here. We are all aware of that. But there are near-term challenges, of course. There are challenges which can be overcome. Maybe in 6 months down the line, we might not be speaking of some of them, and some of them could be much more longer term. But we'll have to go by the how it plays out, essentially over the next course of the next few quarters. But I'm sure that if one wants to build a good quality consumer portfolio today from a 3-5 year perspective, there is opportunity. Market is presenting that opportunity today because valuations are in your favor. And it's like, if you step back 2 years back, let's say, you were just chasing valuations, right? And today it's just the opposite. You are getting valuations that you're comfortable with. You can play the waiting game and get stocks at more reasonable valuations.
Gautam, I'm just looking at Sobha, which is down 13% now. That's a large cut for the largest Bangalore real estate developer. Any thoughts on? I know you stay away from naming names or talking about specific situations, but would you want to make an exception? Any thoughts at all?
Difficult, Prashant, but honestly, Bangalore real estate from a past 3-4 year perspective has been a spectacular performer. So with the IT hiring sort of slowing down, one of the questions that creeps into investors' minds is obviously whether that real estate cycle is in its last leg or not. But obviously, this is much more specific to that particular company than that. But if I had to generically look at Bangalore real estate, yes, 3-4 years back, pre-COVID, looked like a very interesting set of plays there. Valuations were again cheap. And that has played out. That has played out quite well. And today it might not, we'll have to revisit and really decide whether the outlook of the next 3-4 years for Bangalore real estate is that bright. Jury is still out. We are probably debating that today, but that's what I would like to leave it with.
With today's fall, 13% fall on SOBA, we've basically come back to pre-COVID levels on SOBA. This is basically February of 2020 when SOBA was at about 430 or so. So we were back there.
Destruction, yeah.
We're back there after. And of course, with SOBA, there is the IT raid as well, right? Which is, I think, of course, a trigger the near term, apart from what Gautam mentioned, which is the concerns with regards to layoffs, etc. Bangalore tech and tech professionals being the big market there for Bangalore real estate. Surabhi.
Just as we're thanking Gautam, I just want to check, Gautam, can you talk on your own sector? Suddenly become very hot in the market, life insurance.
Yeah, I think should be honestly the biggest swing factor for our sector of late has been the regulatory outlook, especially on the taxation side, and plus the other around the other regulations. So which way that swings is again the deciding factor from a very near-term perspective. So jury is out. Let's wait and watch how that plays out.
Okay, all right, Gautam, always good hearing your thoughts. Thanks so much for stopping by and filling us in with those thoughts. We had a good chat.